But otherwise, let's get talking to the markets, talking about more on the markets. Gautam Sinha Roy of Motilal Oswal joins in with his view. Gautam, hi, afternoon. It's been a good run for our markets today, but I just actually wanted to focus on one specific question. What sort of correlation are you spotting with the Indian markets as well as the globe at this point in time? Hence, with the Dow sitting very close to a second record high, how much of an incremental increase could we see for our markets?
I think that's a very pertinent point, because we have seen Indian markets and other emerging markets being more of a risk-on trade, in the last 4-5 years. So whenever we have seen a risk rally happening, Indian markets have been participating ahead of many other markets too. So same thing we are seeing now too. Last week we have seen risk-off kind of trade happening with the US Dow rallying there. And we have seen Indian markets taking a beating there, volatility rising all over the world. And even other asset classes, commodities included, have seen fall because of this kind of a trade. So that correlation is very strong, and we'd expect that to remain. And that would be one of the key macro drivers of trading in India going forward too.
Alright, some news coming in from Bharti. This is with regards to their $1 billion bond pricing. The Netherlands arm has priced the $1 billion senior notes at about 5.125%. The stock actually is spiking up quite a bit. The notes were nearly 9.5 times oversubscribed, the management says, with an order book aggregating $9.5 billion from high quality investor accounts. And that's the subscription figures that they're giving us, oversubscribed by 9.5 times the bonds, and it's the largest ever issuance from an Indian telecom company. So this is with regards to the $1 billion bond sale that they've done. It's the largest such sale by a private company this year itself, and has gotten quite a bit good response. The company has gone ahead and raised $1 billion through this particular bond sale. So the stock is spiking up. The management has just released a press note to the exchanges regarding the same. Gautam, hi. We've been talking about the way the market has moved today, and a lot of stocks in the mid caps have seen a good amount of bounce back. Cases in point, names like SR Oil, Alembic Pharma, Geometric, etc. After the carnage that we've seen, are there any stocks that you would pick up with an investment horizon in mind?
Thankfully, most of the stocks that we have not been affected so much by the carnage in the last week. But the very fact that volatility has bounced back makes us more cautious in choosing our stocks. So that's why we have been sticking more to large cap quality names. But one stock that could bounce back could be MCX, because we have seen CTT has been introduced, and that hangover is now already in the price. So, going forward, it should discount the fundamentals for the company, which continue to be very strong in a better way. So that's one stock would be more positive on post the carnage. But other than that, I don't think that just because of a one-day bounce back would suddenly become more bullish about most of these mid-cap names which have fallen.
Okay, so majority of the market is in the green, or majority of the 50 stocks are in the green. It's only around 4 stocks which are trading in the red, or rather 3 at this point in time. Bajaj Auto has been sluggish, so that one continues with its bit of a negative bias. So that one's down around 0.8%, but nothing to fret about for the markets. We're sitting pretty at around 57.89. So we'll take a break and come back. Hi, welcome back. You're still with NSE Closing Bell on CNBC TV18, and it is going well for the markets. In fact, the advanced decline ratio has improved as we speak. So it's currently standing at around nearly 1,000 stocks advancing to around 470 stocks declining. So that ratio of around 2:1 is quite steady at this point in time. The NALCO divestment, the government panel is expected to meet on Monday to decide the floor price. So that is an additional development. Remember that the RCF divestment as well as the MMTC divestment floor price could be possibly decided on March 6th and March 8th respectively. So now we do learn that the NALCO divestment too is gaining some amount of steam, and the floor price will be decided on Monday. Otherwise, it's going well for the market. So the mid-cap index is actually gaining much more steam at this point in time. So up around 1.7% for the mid-cap index, and volumes are not too bad as well. So we've done around 1.24 lakh in terms of participation already at this point in time. Gautam, what is your view on all the paper which is actually going to hit the market? We also have the DLF OFS which is possibly going to hit the market soon, and besides that now it's RCF, MMTC, NALCO as well, and possibly even SAIL. Do you think that there's enough to soak up all of this demand?
I guess if you look at the flows that are coming from FIIs, yeah, there is enough demand that is there overall for the market. But for the specific issues, whether there would be demand would be a different question. But for issues like DLF and SAIL, definitely they should sail through if the pricing is attractive. And the other ones I think would be much smaller. So that shouldn't be a problem, because the size itself, if it's less than 1,000 crores for a single issue, that shouldn't be a problem at all. I think SAIL and DLF could be larger issues there, and there seems to be reasonable investor appetite. So don't see any concerns on that count.
On the subject of flows itself, Gautam, the India dedicated funds have not seen too much of flows in the last 3 to 6 months. It's more related to the emerging market funds that have seen more flows. So with respect to India particularly, what's the trend that you see in the next couple of months in terms of flows itself? Do you think global investors might step back a little bit because of the weak macro situation, the worries about growth, etc., that are being highlighted now?
I think these are concerns that are still very prominent on most investors' minds, not only FIIs but even domestic investors. The retail investor base, the participation there is also very low. So these concerns are still not allayed. While people do believe that probably we are close to bottoming out of growth, but some of the high frequency data that comes in, like the auto sales number, even the GDP growth number for the last quarter, we haven't seen a real recovery there. So maybe the growth trajectory change which is expected might be a bit delayed. So that could be a worry that people would have. And we are also sitting on, in absolute sense from FIs, we are sitting on a huge flow number since last year. So that also creates a high base. So continuation of this flow will depend on improvement in the outlook, which has to happen faster than what's happening right now.
Mr. Tulsian, what would a fair value be for DLF in terms of when they do decide their OFS floor price, according to you?
See, generally the OFS always happens at the prevailing current market price, maybe a discount of 2, 3, 4%. But yes, lately the positive bias is seen building up for the DLF, and because of the debt reduction and because of the new launches having done by the company. But I don't think that there will be really any kind of up move or downward trend because of this OFS. So maybe a current price of about 255, or the price at which the OFS can be made should be taken at about 250 to 255.
Okay, so there's quite a bit of buying that we're seeing in the broader markets. Gautam, I didn't get a chance to check with you if you track SR Oil and the moves that stock is seeing, not just today, but in the last 6 months, where it's gotten quite a bit of interest. Would you recommend that stock?
Actually, personally, I haven't looked at yet, so it won't be fair to comment. But after hearing what I have been seeing in terms of numbers, that looks like a very interesting stock. Definitely something to watch out for.
So Darshan, what would your view be on the auto space, or maybe a couple of stocks, say something like a Hero MotoCorp as well as a Bajaj Auto? Bajaj Auto for today is suffering from a downgrade that it got from a top brokerage, and they've outlined a target price of 1800 rupees. Would that be something that you'd possibly check on the charts of Bajaj Auto?
I would actually be a buyer in Bajaj Auto. So it's one of the strongest trending stocks on the upside. We have these small hiccups, that's okay. Today is a down day, it means nothing. It's had a small correction, stopped that correction at a very shallow level. So Bajaj Auto to me is a buying opportunity.
Okay, so buy into Bajaj Auto. Perhaps the weakness is overdone for now. The stock is still down another 1% but it's run back. See, I think the management has come out with a press release now where they said that they're going to indeed market that antidepressant drug in the US, and they've entered into an in-licensing business agreement with Alembic itself. So the press release has been detailed by the Ranbaxy management. The product is a bioequivalent version of the innovator drug Pristiq by Pfizer, like Ekta was mentioning, and the market size for Pristiq is about $590 million. So that's the reason why you're seeing a huge spike up in two of these names. Mr. Tulsian, just a quick check on Alembic Pharma and the impact that we could see because of this out-licensing agreement with Ranbaxy. Do you see an incremental impact, or do you think most of it is played out?
No, Sonia, in the longer term, if you really take a call as such, I've been maintaining my positive view on Alembic Pharma, and they have really been doing quite well. So this could, I don't think that the benefits of this has already been factored into the price, and one can keep a price target of 100, because if you really see overall the margin, profit margin of the company, that has been on an uptrend, and the stock has really been doing quite well. So maybe a longer horizon of 3 months can give the better return from here on.
All right, so on that note, let's get in some more market opinion, this time round from Prashant Khemka of Goldman Sachs, and we'll come back.
You cannot lose sight of the fact that it was a budget presented in an election year. And within that context, it does a reasonably good job at addressing fiscal deficit. It is predominantly focused on fiscal deficit and hardly much more than that. What we mean by normal earnings or normal returns, I would say normal returns to be expected from the market are in line with earnings growth, the trend line earnings growth, which for a long time in India has been 15%. That should be the base case to us, base case expectations on market returns over the next 12 months. Until the uncertainty of elections, central elections, is out of way, it is unreasonable to expect multiple to expand from here. And hence I say 15% kind of return over the next 12 months would be in line with earnings trajectory.
A good 2012, India seems to have lost its way a little bit for the last couple of months. Do you see it just as a temporary break in the market?
The macro environment which had been improving, people would start focusing on that once again. So if you look at the macro, it is the best it has been over the last couple of years, with improvement on inflation front and hence monetary policy becoming more of a tailwind, improvement in the global macro environment. Most importantly, the policy uncertainty environment that we had existing over the last 18 to 24 months, that has reversed to a great extent with the slew of policy measures announced over the last 6 months. So as people, get the budget behind themselves and focus again on more general macro, I think the market would start behaving more normal again and would embark on and focus on the earnings growth trajectory, which is clearly expected to improve past this last fourth quarter.
I'm actually a bit surprised to hear you say that, Prashant, because the macro is actually looking quite shaky. I mean, our current account deficit is the highest it's ever been. GDP growth is down to 4.5%. We saw one of the worst earnings quarters which went by last quarter. Surely you're looking only at the positives and ignoring many of the negatives in macro.
The fourth quarter GDP is a matter of concern. From here on, we are looking at improving GDP environment, maybe not rising to the 7-8% growth rate within the next 12 months that might be baked into budget estimates, but yet certainly improving from where we have been in the last quarter. And that should revive corporate earnings growth. Over the last 5 years, what we've seen is GDP growth rate going down from just under 10% to under 5%. That's a major economic headwind for corporate earnings. Under such scenario, the corporate earnings have grown in at a high single digit pace. As this economic juggernaut stabilizes and turns around towards the 7% kind of growth over the next, let's say, even 18-24 months, corporate earnings growth would re-accelerate and market would follow the corporate earnings growth, and that should result in mid-teens earnings growth.
On this point about next year's improvement, Prashant, when the GDP growth hit 5.1, 5.3% earlier, there was a feeling that that was the trough for GDP, and nobody actually predicted 5% GDP, which we'll end up FY13 with. Are you sure that earning growth has bottomed out?
The trough seems to be getting deeper and deeper. The uncertainty around their base case expectation is certainly high, and so one cannot rule out. As you pointed out, last year, a year ago, to think of a 5% or a sub 5% growth rate for Indian GDP was unthinkable. As of today, the base case in our thinking is that we have seen the bottom in the fourth quarter. With the slew of measures that the government has announced, the policy uncertainty is not gone away, but it is somewhat diluted.
Alright, so that's the view coming in from Prashant Khemka. Let's just wrap up the markets for you. 4 more minutes to go. So today has all in all been quite a good day for our markets. Not just the markets, I mean India won the second test against Australia and Hyderabad as well. So on the field, off the field, we've had a good session today. 57.83 on the Nifty. So let's get some closing strategies in. Sudarshan, a quick word on the index itself, and if you have any trading ideas for tomorrow.
Sure. I would suggest that the index and the bank Nifty and the Nifty positions should be closed for short-term traders. Tomorrow morning we'll pick it up again. It's possible to carry positions in mid-cap IT, I have named them, and in PSU banks.
Okay, we'll just quickly wrap up the day then. We'll come back to you guys for some final calls. But very strong day of trade. The Nifty climbed past the 5750 mark quite comfortably and ended closer to the highest point of trade, up close to 260 points on the Sensex and about 85 points on the Nifty itself. Even the mid-caps had a great day today. And all in all, you'd have to say that if you can count the losers on your fingers really. So just about 4 losers in trade today. You have Bajaj Auto, BHEL, Sun Pharma and ITC. Those are the 4 losers from the Nifty. Apart from that, all the other stocks are in the green today. So let's talk about the winners. The market has been so heavily oversold that we did see a lot of these oversold names bounce back today. Be it the metals, where you had names like Hindalco, Tata Steel, JSPL, Sesagoa, all of them up and about. You had cement, so Ambuja Cement, etc. was up about 4% odd. Tata Motors, where JLR has decided to hike its engine plant investment by about more than 40%. So Tata Motors rose on the back of that. And DLF, tomorrow the board will be meeting to decide the offer for sale. So DLF is up almost about 4% or so. That apart, you do have many names like ICICI Bank, Axis Bank from the banking space that supported the market as well. And Bharti too, on the back of that bond sale going through successfully by its Netherlands subsidiary, Bharti Airtel is up about 2% or so. A couple of other gainers included the likes of JP Associates. You had Grasim. HCL Tech hit a fresh 52-week high today, so that stock was up more than 4%, and Wipro too has been on the gaining side. So to sum it up, it's been a strong session for the market. The volumes too have been quite sprightly today, so more than 1.3 lakh crores in terms of total turnover. But just be sure to realize that this a pullback in an oversold market, so perhaps it could not last too long, and perhaps it could be sharp on the upside as well, just how we saw the sell-off too. So maybe it could catch traders on the wrong foot. Otherwise, mid-cap index has had some smart movers, so Ekta's going to detail that.
Absolutely, it's good to actually see a 1.7% increase in terms of the mid-cap index. We haven't seen that in a while, and conviction was high as well. So 1.3 lakh crore is what we did in terms of volume. The advanced decline ratio was steady at around 2:1, so nothing to complain about. It was SR Oil which was the talking point in terms of the broader market gains. So remember, Goldman Sachs actually reiterated its buy on the stock despite the fall yesterday. So that one has a target price of 110 rupees. The brokerage has a target price of 110 rupees on SR Oil. So by the end of it, it was up 23% and extremely high volumes on that one as well. So good going for that one. Otherwise, there was a lot of gains coming in terms of secular moves. So, and that actually is indicative of the fact that pharmaceuticals as well as high beta participated on the upside. So we had a lot of pharmaceutical stocks such as Alembic Pharmaceuticals, as well as something like Dishmin and Aurobindo. So all of these stocks gained, and it was in line with a lot of these high leverage counters as well. So the likes of Gammon Infra, GVK Power, GMR Infra, IVRCL, all of these stocks gained quite significantly as well, indicating that there was buying across the board, and it wasn't just a high leverage, high beta sort of buying that we saw. Otherwise, it was also a couple of these stocks such as PC Jewelers, which was up around 12 odd percent. There was a couple of these textile names which gained as well. So Arvind was up around 8 odd percent. Alok Industries too, which was up around 8 odd percent. A couple of these mid-cap IT counters too saw some amount of buying. So Geometric was up around 7 odd percent in today's trade as well. A couple of stocks in news was Godrej as well as Jet after that BKC deal, land development which they're going to undergo. Revenue potential of 3,000 to 4,000 crores is what was outlined by the management. So both these stocks were up anywhere between 2 to 3 odd percent. Otherwise, on the downside, it was a couple of these stocks which actually deserve mention is something like MMTC. So that stock was down around 9 odd percent, and a lot of these education stocks seem to be back on the selling radar. So Core Education was down 3 odd percent. EdServ Soft Systems, which is now a 5 rupee stock actually, so that one was down around 3.5% as well in today's trade. Educom saw some amount of profit booking, so that stock was pretty much down and out as well. The other one is Titan that we've been highlighting, so that stock was down and out, so that one lost around 2 odd percent. And Idea Cellular, in terms of influential broader market stocks, too lost out, so that one was down around 1.4%, and MCX as well was down around 1.2%. All in all, you'd have to say that it was definitely a steady session. 57.84, we ended at the high point of the day for the Nifty, and a lot of it was attributable to how exactly the European markets moved, because the FTSE CAC and DAX, all of these counters were at the high point of the day, up around 1.5% to 2 odd percent, even for the Italian markets. So that amount of up move possibly percolated into our markets, and that's exactly why we've possibly seen such a good healthy session for us. But follow through is the name of the game, so we'll have to see how exactly the rest of the week pans out, and whether or not we can build on these gains, or whether it's possibly just going to be a flash in the pan in terms of gains for today. But Sudarshan, what is your opinion? You said that the trend you'd be still a little skeptical about. What would give you some amount of conviction that yes, maybe the trend is now on the upside for us?
No, the short-term trend is up, we are buying, but what is the conviction level for the intermediate trend? We have to go and take out the highs that we made at 61.50. That's a long way off, so it's a little difficult to imagine that event happening. Therefore, the conviction for the intermediate trend will begin to strengthen, or will start as time goes by. If we keep on making these new levels in the upswing, keep on adding to our strength, then perhaps conviction will come, but one day is not enough.
Mr. Tulsian, any trading ideas that you would have for the rest of the week?
See, 2-3 stock comes in my mind. One is the Godrej Industries, second is Pantaloon, and third is the financial technology, because all three are seeing the short covering, because all three counters were looking quite short. And apart from that, in fact, I see some fundamental elements, which will start, panning out over all three stocks, maybe in terms of the re-rating of financial technology because of the MCX having bottomed out, or maybe Pantaloon restructuring, move having approved by the Bombay High Court, or maybe in terms of the Godrej Industries, where we see the effect of Godrej Properties coming in, because Godrej Industries is the holding company of Godrej Property, and the kind of run-up which we have seen today in Godrej Property has not seen getting reflected into Godrej Industries. So these three stocks should be kept on radar from 1 week point of view on the long side.
Mr. Tulsian, I forgot to actually ask you about sugar. Bajaj Hindustan was bouncing back from a 52-week low that it touched yesterday, and there is a possibility that sugar decontrol might take some amount of increased impetus in the next couple of weeks in terms of possible decontrol, etc. What is your view on sugar? Would it be a buying opportunity at these levels?
See, from the expectations of the decontrol, or maybe the scrapping of the levy 10%, which seems imminent, I will keep my three stocks on radar. The preference wise, first will be Balrampur Chini, second will be Renuka, and third will be Bajaj Hindustan, because definitely all three will stand to gain because of the larger production capacity they are having, but Bajaj Hindustan will be having the least advantage because of in all these three stocks.
Alright guys, thanks so much for joining us and taking us through the last 1 hour of trade. We need to slip into a short break. We'll come back with lots more market opinion. It was quite a strong day of trade. We did not look back even once during the day, and we ended at the highest point. We'll come back.